All right. So when it comes to the fibs, as y'all know, for the people watching on YouTube, I've already made multiple videos on the direction of the fibs. Today is just another breakdown. So if you already understand that perspective of how we draw out the fibs, this video isn't for you. Um, anyway, when it comes to the fibs, you have something called a bullish range and a bearish range. Okay. Also for the people watching, I'm in a one-on-one. So if you hear other people speaking, it's because I'm teaching. So a bullish range is when price is like a staircase going up. A bearish range is like a staircase going down. So look at bears down and bulls up, simple. And or uptrend or a downtrend, same thing. Now that we know this, we have to understand that we have something called highs. Start that with the H. These are all highs, and they will always be highs no matter what. Clone, highs, clone, highs. And now we have lows in the market, obviously. We have lows. These are where, hold on, let me fix this. Lows in the market, my bad. Clone, we have lows here, we have lows here, and we have lows here. That was ugly. Lows here. All right, so there are always sellers at highs, and there's always buyers at lows. Um, Simple. When you're shopping, you always want to buy something when it's on discount. You always want to buy something at the cheapest price. And if something is too expensive, you always want to sell it when you to make more money. Okay? And it's the same concept. So we have something called premium. Let me move this out the way. Give me one sec. This is so aggravating, bro. Um, okay, you have premium, boom, which is this right here. Premium will always be above you, and then you have discount. These are two things that run the economy, that run the entire world. Premium discount, supply and demand, support and resistance, all of it is the same thing. Discount buyers and lows are always trying to push price back up. Premium and highs are sellers always trying to push price back down. And it's our job to determine the market cycles of when and where to get in your trades. So we utilize something called a Fibonacci retracement. If you to get on the technical side of things, if you look up the Fibonacci retracement, not retracement, but just the Fibonacci sequence, it's the universal sequence that you find in everything, just in nature. But not to get too much into that, it just aligns with price action. So for example, this is the entire range. You have, how do you determine a range? You just want to look for, in a sense, I'll give an example, the mother and the father. You have the mother, you have the father up here, this is a high, and you have the mother right here. As long as they're together, all the kids in between are gonna follow their rules. Meaning, you always put the father first, boom, and then the mother, and then everyone in between, the kids in between. Who is calling me? Scam likely, no. And then the kids in between will listen. So we have something called a bullish Fibonacci and a bearish Fibonacci. Remember what I told you earlier? Bearish means down, bullish means up. So we're gonna draw a bearish Fibonacci starting from our swing high to our swing low. You're gonna have two templates. This is your bearish fib. Bearish. Who is calling me? Stop calling my damn phone. Bearish fib right here. Okay. We can now delete this. Let me get this about the way. Starting from ground one. So you see how we have these levels on the side, 236, 382, 618, and 786. This is where we take our trades. I'm actually in a trade now on gold on a lower time frame. This is a trade I'm taking. I was just inside the community going over this trade. They just saw me take it. We're taking this trade based on the 618. This trade tapped the 618. I got in late though, and it went bullish from there. And that's the trade that I took. So we're always taking trades at our major levels. I know it may look confusing, but it's not. Major levels right here, 786, 618, 382, and 236. Now, how do you determine which direction to take your trades at, right? It's like, okay, if price comes up to my 618, how do I know to buy or sell? Do I wait? Do I buy it or I sell it? Okay, look for something called price action, and you have levels that are called inducers. Inducers. So for example, um, an inducer is kind of like when you're playing a video game and you need a charge. You're driving, but you need a boost to go faster. Mario Kart. You have levels in the market that is like a Mario Kart that induced a direction. So, for example, this will be an inducer. You see this 4 hour on the 4 hour time frame. You see this 4 hour wick? That is a inducer for sales. So you understanding these two confluences, you now know that when price starts to find its way up to this range, you are anticipating what? Buys or sales? I'm asking you, Auntie.
Oh,
Like you was zoomed in. Are you would you be
yeah, I was.
anticipating buys or sales here, considering we have something inducing a downtrend?
A downtrend, it would be when we do it down, remember?
When wait, do what? So
Yeah. So
Ask
look,
the
so
question again, Bob.
okay, so we have something called inducers, and this wick right here is inducing a downtrend. So if you know that a downtrend is about to be initiated, what direction do you want to take a trade? Do you want to buy it for it to go up, or do you want to sell it for it to go down?
You want to sell it to go down. It's going down, right?
Exactly. Okay, so you don't care about what price
and
is currently doing, you care about what price is going to do. So this right here is an inducer. So I'm gonna show you, I'm gonna help you out. I'm gonna help you out. So look at it like this. Um, if I can find it. Ah, hurry up, hurry up, hurry up. I'm looking for the magnet.
Turn it off, baby. Turn
Where
it
is
off.
the magnet? Hold on. Let me pause it so it don't take me too damn long. Okay, so you want to look at this level right here, this wick, as an inducer in confluence with your 618. Because remember, we take trades that are 618, 786, 382, and 236. So knowing that this is pulling price up, which will ultimately, let me come here, which will ultimately, baby, let me look for a, come on, we're going to try to find it real fast. 10, 9, 8, bow, right here. So once price gets here, so like here's an example. While price is pulling, all we see is magnets. This is pulling price up. So price is going to do what? Come up, come up, come up, come up, come up. But the moment price gets there, oh snap. We start to replace these magnets with hammers to push, well, with axes to push price right back down. Boom. Because why? It's an inducer. So price is literally sitting here doing this. Hold up. I can't move it. Oh, it's probably because I'm on magnet. Hold on, there you go. Boom. Price is doing this. Bam, 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 bam. It's telling it to go down. So as soon as price get there, that's what you're doing. It's an inducer. So now let's go ahead and replace all of these magnets with these levels here. Cool, simple. We get it. Y'all get it? So now while you're in this trade, you're looking for sales. Oh snap, I took it too late. Damn. I already showed it. It was supposed to be here. Sales. Boom. Where's your stop loss go? Your stop loss, just in simple terms, goes at the high. TP goes to the 382. Hey Zeke, why am I taking my trade at the 382? Or why do I want to take this trade down to the 236? Okay. You have more inducers. You have inducers all over. This video is gonna be based on inducing levels. Yeah, that's what I'm gonna title it. You have inducers everywhere. That's what you want to look for. That sets you apart from anything in the market. This wick right here is simple. It's not overcomplicated. Don't overcomplicate it. If you don't understand it, then sit there and don't understand it. Experience will teach you more than I can. I'm just here to hold your hand. I'm helping you how to identify where price is at. So you see these levels down here. We can go ahead and delete these damn magnets. I mean, these, daggone what you call it. And now we're looking right here. You see how we have these highs right here? High, like all these
Hmm.
highs. Price just broke it, right? Price never came back and retested it. The same way price broke this wick and never came back up. So price broke this and never came back down, meaning we have more magnets. So now that we're in this trade, you see how now let's delete all these, this, and bring these here now. Nothing changes. Now we have more magnets because now we're in a trade and there's something that's pulling price to our take profit. That's what's going to set you apart because a lot of traders, they take a trade, they have a great entry, but they have no reason for price to continue that direction. They take a trade, but they have no reasoning for it to continue. They just understand the entry and the entry only. Pay or decline $54 request. Mike Hernandez. No. Anyway, so now that we know that price has to correct below these highs, that would be the term. You want a correction below these highs. You have something pulling price down. Now you're in your trade. Take profit, stop loss set, boom, and you drag it and you take it down to the downside. Bow. TP hit. Now what? Now you're like, okay, price is down here now. This is what's ping pong. Yes, it's a little bit, and just a disclaimer, it is a little bit more complicated than this, but this is the root of it. I'm getting you to understand the root. Now you're sitting here and you're looking at the market. Like I said, we already had this marked up earlier. I just took it off, but now it's the same thing. You see how the same thing that was up here is happening down here? This 618 aligned with our inducer.
Mm-hmm.
And now this 236 aligns with our inducer as well. And you see how green means go, buy, and red means sell, discount. It's a
Mm-hmm.
confluence, understanding and incorporating your direction model in confluence with inducers to push price your way. So now you're in buys. Stop loss, wherever stop loss needs to be. Take profit wherever take profit needs to be. I'm not getting at this video isn't on stop loss and take profit placement. It's just on understanding how to take your trades properly. And then price came back down, and ultimately we're gonna ride it all the way up. Now what? You have more inducers. Wait a minute. Where's more inducers? Look at your 786, okay? Do I have any big, strong wicks at my 786? Yes, I do. Where is it? Right here. Bow, bow. 786. So what am I going to do? I have a limit at my 786 because I have a inducer in confluence with that. There's something pushing it down. And I know I want to sell for my premium at all times. So I have my limit there. And that's the trade we're in. That's the trade we had caught today. I'm gonna show you the trade we caught today in the community. Bow. Oh dang, it went too fast. But you get the memo of how we're doing it. You want to continue to just bounce, 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 bounce back and forth. You just need to understand how to draw out your ranges. Cool. So now, do you understand that? Do you have any questions on that? Obviously,
Um,
I know you don't get it all the way now, but yeah.
I'm following you
Okay.
with
Okay, cool.
it's
Let me
okay.
just
Figure it out later.
this trade is BSing. Oh my goodness, it's taking forever. Whatever. Okay, so now that we got that down pat, now let's now incorporate internal ranges because you can draw internal ranges in the market. Always. You can always draw an internal range. So I'm about to show you an example of an internal range and inducing levels that are correlated with an internal range. So let's say, for example, you're on the 15-minute time frame and you're not on the hour. Previously, we were on the hour, right? You have multiple ways to draw out your fibs. You can either draw out your fib, an internal fib, starting from the swing low to this swing high, which would have looked just like this. So let's take it back. You wouldn't have known to draw your fib like this until price created this high and did this. So then you would have known. So then now you're looking at your fib. Okay. And it's simple. You want to take breakouts and retests of each and every trade. So here, you want to schedule, you want to be on your 5-minute time frame. Let's go back 5 minute. And you want to take breakouts and retests. So this sell activated. Wait a minute, my bad. Hold on, let me fix my fib. My fib is incorrect. It should be a bullish fib, my bad. Bullish fib. Boom. Stop loss, high, take profit, these lows. Simple. You're gonna push price to the downside because you understand the direction. Okay. Now, you always and you see the reaction that you got at your 382. Look at the 382 reaction that you just got. Imagine, well, 618. Imagine you bought this. Let's see what that goes to. This would have been a beautiful trade to take. It may not seem like it, but this right here is a great trade. 618. A good trade isn't determined by hitting your stop loss or take profit. It's determined by the reaction that you got at which you entered at that level. Okay. But not to get too much into the detail. You're on the 5 minute with it. Cool. You already caught one trade. You're trying to catch buys off of your 23786. Always. You do it like clockwork. You don't think about it. It's mechanical. I'm a mechanical trader. That's what I teach. So boom, once you get to that level, you're literally what I'm doing right now, you can literally do it. There's no different. Set limits. Bow. I'm not worried about stop loss placement right now, so let's just throw it out there. Boom. Take profit. Boom. This would be my trade right off my 786. Why? Because there are inducing levels here. This is a very strong pivotal level. Price was in the range, and this was the area of which price made a decision before buying. As many times as price came up and retested this range and the wicks and spaces that we have in between this range is crazy. All of these levels right here in confluence, that inducer is in confluence with R786. So this entry is locked in for buys. This would be a trade. Take profit. And you're going to continue to do that over and over and over and over and over again. Okay. And that's just that. So, that's perspective on the fibs. Let me get into price action. I mean, not price action. The, what video is that? I'm gonna get into the trade. I'm gonna get into a trade explanation that we took. I mean, I may explain the trade that I'm in, not right now, but I may explain the trade that we're in that I took this morning. But let's go over them and let's go over the trades I took in the community. All right, so all right, I'm gonna go to trade history. Make sure my screen sharing. Okay, yeah. So, you see this trade here? This was a 618 entry. So the red means I entered there, the blue means I got out. Imagine if I held this trade, this would have been like a $4,000 entry. In a $4,000 trade. Boom. But it was a $600 trade. We took it from here straight to here and closed. Right? That same level is this same level right here. So now let me delete all of this just so that you can see. Boom, 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 and boom. The way we got that trade is because our macro fib, we already took the original sell. We already been took the original sell. Let me show you. Let me show you that one first, actually. The original sell was right here. No. Original sell was right here in this video. Off the gold 786 play, which was up here. And we caught that one. So now we're catching somewhat of a re-entry for sales, which we utilized a second Fibonacci for this entry. And we caught this trade off of the 618 retest to the downside. The trade looked like this. We drew out our levels like this. Boom to boom. And this was the entry. 618, straight to the, my bad. Yeah, if I didn't say that already. 618, straight down to the downside. TP. Now, the trade that we're in now is supposed to be based on the 618. All we're doing, hopefully I'm not confusing you, but all we're doing is ping-ponging left and right off of the same daggone levels. Price is buying right now. Why? Because it's our 618. And also because it's the same inducer I just explained to you earlier. Price previously used this level as a resistance, and now it's using that same damn level as support. Resistance means it's coming up to push it down, and now it's coming down to push it up. Don't nothing change. And you continue to operate within that nature. And you continue to take trades just like that. And yeah. Let me do another example. Let's go to another range. This is a internal range that I drew out for a guy named Vince on my server. He trades a different strategy called Holy Grail, which is my boy Romel's, and they always align. Let me actually draw this out. This is tough. Okay, cool. But I was explaining to him the entries that we caught on a more internal level. This is such a small level compared to the overall perspective of price. Overall perspective looks like this. And this is just little old this. And I was telling him, look at the entries. Don't nothing change. It's the same exact concept. This box right here is the wick that was responsible for all the rejection at price at our 236. Wait, bullish fib. Nope, 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 nope. Oh, bear. It is a bearish fib. This is a bearish fib. Boom. Yeah, because I do it from top to bottom. Exactly. So this wick was responsible for all the rejection that we had at our 236. So I drew that out. Buys right off your 236. Price came straight to it. Wow, simple entry. Same thing up here. This is another inducer. Look at all of these inducers, all of these levels that induce price to go a specific direction, and you know which price is going, you know which direction is going to go based on the color coordination of your Fibonacci. So you would have known to sell this. You would have known to buy this. You know what I'm saying? So that's that. You got any questions so far? No.
Mm-mm.
All right. Let me see. Is there any part that you may be like slightly confused on, or is it clicking?
The overall gist of it makes sense. I just need more, I don't know.
Experience?
Yeah.
Mhm. Okay, so I'm gonna end this video here and I'm gonna upload this and then I'm gonna get into your implementation on your actual chart. So appreciate y'all for watching the video and I'm gonna catch you on the next one. And stop.